Hey YouTube, this is Steven with On My Way to FIRE, a channel about early retirement and all things investing. And in today's video, I want to talk about market activity and give you my market perspective for the latter part here of July 2026. All right, so we're in an interesting time right now where we're in between earnings announcements from the big Magnificent Seven companies like NVIDIA, Google, Amazon, Meta, those companies. They'll be reporting here shortly, with some more companies reporting next week. We do have a federal funds meeting for the FOMC coming up at the beginning part of next week, and a decision on interest rates. So we're kind of in an interesting holding pattern, trading within a range. Market highs reached for the S&P 500, Russell Index, and NASDAQ are all pretty much just kind of sloshing back and forth. Little here, a little there. Some individual companies may be experiencing more volatility, but on a whole, as we look at the market in general, it's really hasn't sold off significantly, but individual stocks may have gone down more than others. And a company I always come back to is NVIDIA. Had a high somewhere around $230 and recently got to about $194 or so, and is consistently trading right around $200. So that's more than a 10% drop. But just as an individual company, and they don't really respond to earnings as well as some of these other companies. So I'm not sure what it's going to take to get them to the next level to really rally in the $250 to $300 range. But in general, we're just kind of in a holding pattern, going back and forth. And if you're in a 401k or regularly contribute to a Roth IRA and buy mutual funds, pretty much you're getting decent prices right now. But the real growth is going to occur probably towards the end of the year, is my opinion. And as far as the federal funds meeting with the Fed, I don't think they're going to do anything. But there is a possibility later in the year that they may increase interest rates by probably a quarter point. And I could easily see it being reversed within the next meeting or two after that. But just something to shock the market and give a temporary signal that they do take inflation seriously. I think they are going to fudge the numbers in their benefit to make it look better than it is. But us as consumers, we're seeing high prices that just stay high. We're not getting deflation on these prices. They celebrate on this last inflation report within the last week that the inflation was only 2.6%, I think was the number they gave. But compounded year over year, inflation is just horrible. You're looking at between 30 and 50% on items. And all they can do is celebrate the number not accelerating as fast going forward. So it's not that inflation stopped, it's just the rate of inflation is slightly lower than what they expected. So, that's just what you call market expectations, setting it high, and then now hitting a number that's still high, but, in terms of the market's anticipation, they saw it as something good. So I don't know. But, another big story that's happening right now is AI data centers and how certain states like New York are imposing a one-year moratorium. And, they want to look at the environmental and local impacts of the communities where these data centers are. And that could definitely affect some of these big tech companies later. But, it's going to come down to whether they can find alternate locations, maybe in rural locations like in Utah or Nevada, way outside of regular communities and then in the desert maybe. Who knows? But it's going to draw a lot of water and power, so they're going to need that nearby as well. So I don't really know enough about it. But it seems like some of these states are going to really push back and not want it in their community. But, it comes at the cost of, big jobs that could come in. And they're going to move to other states and other areas. So, it's a dangerous game that some of these politicians play. A few years back, Amazon wanted to do something in the Brooklyn area of New York. And there was a lot of speculation with home buying. And I guess it got to a certain milestone point, but the deal got canceled. And so I think some people actually did buy houses based off that information, thinking that it was going to really go up like 30 or 50% because Amazon was bringing these jobs. So, speculation sometimes can burn you, and that definitely happened to some investors over there. But, back to the topic at hand here with the market, I think we're in a healthy trading range, and you just keep your allocations for stocks, just keep them buying every 2 weeks on schedule, and, we're going to look back probably in the next year or two and see this as another plateau before the market takes off again. We do have continued issues with Iran and what's happening with the oil markets. But, I watched the futures market yesterday, and the oil was at like $90 a barrel, and by the time I woke up today, it was in the low 80s. So I guess there's some continued talks with Iran, and they're signaling that they may want to, meet back for negotiations again. But this is just getting ridiculous with all this back and forth. Will they, won't they? As far as trading's concerned, if you are a trader, there's definitely money to be made in the energy markets, because as soon as a peace agreement is announced, these oil and gas stocks plummet. You can come in and buy them on the dip, and then what ends up happening, it's already happened 2 or 3 times now, where they go back up based off escalating tensions. So it's a bit of a dangerous game to do that too, because you can get stuck holding some of these oil and gas stocks at the high, thinking you got it on a dip, and then the peace deal is finalized, then it really goes down. So it's something that I don't like to buy on news like this. I like to sell into a straw market and just recalibrate for the next dip. I don't like geopolitical events. I try to just keep it slow and steady when it's under the radar. And so the last thing I want to touch on here that's really been mentioned in the last month is what's called sector rotation. And that's where people are selling their tech stocks, as I mentioned in another video. Really that started around the SpaceX IPO time. And now it's been a full month since then. And what we're seeing is a little bit of a bump in healthcare and consumer staple products like a Kimberly-Clark or a Clorox type company. And their stocks are going up a little bit, not much, maybe like around 5 to 7%. The healthcare VHT from Vanguard is the ETF that I track. And I did see a little bit of a bump in that ETF as well over the last month, somewhere around 10%. I tend to trade individual pharmaceutical stock companies, not so much indexes with healthcare. So I have noticed a little bit of a tick higher. But one that hasn't been mentioned are REITs. And REITs have really been performing well lately. So, a lot of this, you just can't apply logic to what's happening. Interest rates are still high. The housing market itself seems to be kind of stuck. And, entry-level buyers, young people in their 20s and 30s cannot get into their first home because the prices of the homes are so high, the interest rates are high, and getting a loan requires such a high payment that they might not even qualify. So you have something happening where older people are staying in their homes longer. They might even be paid off or have a really low interest rate if they refinanced in the last 10 years. And young people cannot get in that entry-level market, and nobody's trading up to the next house. The family that maybe was just getting married when they bought their first house, maybe they have a family of 2 or 3 kids now and they want a bigger home. They can't move up to the next house, and it keeps going and going. And so everybody's kind of just stuck. And I think there's really a sense of frustration with the younger generation, these kids that are graduating high school or maybe in college, even up into their 30s, just getting started in life. So it's very difficult. And a lot of this comes back to the K-shaped economy and how those of us with investments are doing pretty well right now and are able to navigate the higher prices by investments, getting dividends and selling stocks occasionally, but staying continued, to be invested in the market and participating. And it's unfortunate because we have a generation of younger people who just can't get started, and it's just down to circumstances, similar to what happened with the Occupy Wall Street movement back during the financial crisis. So I definitely feel for those people, and I hope things turn around for the economy to where we can get everybody participating in the American exceptionalism, as they call it. So anyway, we're really just stuck in this market here within this trading range. I see us breaking out to new highs probably coming into the 4th quarter, but a lot of it's going to depend on what's happening with these tech company earnings that are going to be announced in the next couple of weeks, and how the federal funds decision comes out in the next week or two. So stay tuned here to my channel. I'll be providing updates, and I appreciate you guys watching, and we'll see you in the next video. Bye.